Good evening, everyone. A very warm welcome to another session on behalf of Pluxee. If all of you would like to make the most of your money in 2025, I'm sure the session is for you. Today, we'll be providing actionable insights into the latest tax saving tools, investment opportunities, and planning techniques. I welcome CA Nitya Shah, who leads the personal tax practice at One Finance. Niyati has over a decade of experience in personal and corporate taxation. As a CA and CS, she specializes in tax efficient strategies. Over to you, Niyati.
Yeah, hi everyone. Good evening to everybody. And thank you so much for the introduction. So, everybody, I would like to just take 2 minutes of yours, and there's a Google form shared with you all. It will just take 2 minutes for you to ensure. What is your knowledge? Or basically, it's a knowledge check wherein you'll be able to analyze how much do you know about tax. Sometimes we feel we really know a lot of things. However, when there is a question put across, sometimes you'll not be able to answer. So I think we'll take 2 minutes, and I would request everyone to fill up that Google form, and then we can proceed. In case anybody is having a question or is not able to access the Google form, please share your comments so that we'll be able to analyze.
Niyati, I think it'll be good to get an audio check because we do have a couple of questions in the chat.
1 second,
Just
please.
want to confirm if everyone can hear us because there are a few questions in the chat.
Am I audible enough now? I think I should be.
Okay. People have messaged saying
Perfect.
they yes.
Okay. I think we can start now. Most of you, I assume, have been completed the Google form. So starting with, as everybody is aware that I assume that most of you are a mix of millennials and Gen Zs as a part of our audience. So considering that, a basic question that I would like to address, everybody these days has a problem with respect to their savings, their investments, and how do you actually manage your finances, right? In that sense, because you have a lot of bills, lifestyle expenses, and you're actually managing your income to ensure you have correct spending and correct investments. So in that case, our generation, because I also am among one of that, so in that case, I believe we are close to having like 25-30% or maybe even lesser portion that we keep aside for our investments or savings, be it in any form. Most of our income is basically diversified to the spending, be it household or be it in any form, right? Our needs, our wants, all of that. However, if we just go a generation back, like take it our parents, they had a little bit different proportion of their income, which was categorized into spending and into savings. That would be, I say, close to 30% would be their spending and 70% would be their actual savings and investments. If we go a little ahead in another generation, be it our grandparents in that case, they will be having their portion of income. More so, the wealth creation was their purpose because they wanted to pass on the legacy to our to their families. Like if we can say so, विरासत में अपने बच्चों को पैसे देने हैं. However, our generation is because of inflation, because of other parameters, we are actually not able to ensure that we are able to take care of our own retirements. And hence, basis on all these parameters, we've classified basically finances into 6 broad parameters. One is income and expense planning. The other would be investment planning. Third would be insurance. Fourth, income tax. Fifth, loans. And last but not the least, will and estate planning. So we'll talk more only about income tax planning and not other parameters, because I think that would be taken care maybe in the next this. So talking about tax, right? Everybody has this myth that tax needs to be taken care either in the month of March or in the month of July. Why March? Because March is the last month of the financial year, and everybody is actually managing to reply to the emails for declaration of their investment proof that you have received from your HRs. So you have to ensure that your TDS is deducted on time. You have a good in-hand amount in the month of February and March. So that is one point wherein you decide what steps do I need to take so that my taxes are saved for the financial year. The other time when you think about tax is, I think, mostly July, because at that point of time you need to file your returns. So that is one of the time when you think काश मैंने ये कर लिया होता या काश मैंने ये investment कर लिया होता, and accordingly I could have saved taxes. So that is, I think, a wrong perception about tax, because tax is a year-round strategy. Why so? Firstly, if you don't have this year-round strategy for tax, then you're always in a struggle कि कौन से instruments में invest करे. And at the time of return filing also, you're really stressed about, because the tax outflow is really high, and hence there is a lot of disturbance when it comes to the process is not very smooth. Hence, if things are taken care throughout the year, step by step, I think firstly it will help you ensure peace of mind. Secondly, it will not only inculcate a good habit with respect to your disciplined savings. So to give you an example, I think it would be PPF, a public provident fund. Actually, it is a terminology wherein it is called triple E. Why this terminology? Because PPF investment wherein you get an ATC deduction. ATC deductions will be discussed a little later in the session. Secondly, with respect to interest, whatever interest is earned on your PPF investment, that is also not basically taxable. It is exempt from tax. And when PPF is matured, generally the PPF investment lock-in period is of 15 years. However, 5 years is wherein you cannot withdraw any money. But after 5 years, you can 50% of the PPF investment plus interest accrued to you is eligible for withdrawal in case you want to. So in that case, withdrawal is also not basically taxable. So all three parameters, investment, interest, as well as withdrawal, all of these parameters wherein you take ensure that you have invested in this particular instrument, it will not be taxable, and hence the amount that you can invest in PPF is like 1,50,000 throughout the year, the maximum investment, which if you divide in like say 12 months, which will, like, you can say as 10,000 per month, or in some cases 15,000 also. So accordingly, this will ensure that your PPF is being taken care of. Your retirement is also sorted. You're not even paying taxes. You are keeping aside an amount from your income, which will ensure that you're generating income as well. So hence, tax is not only about, a one-way thing, But yes, it helps in inculcating this habit of disciplined savings also, if it is considered throughout the year. Coming to another point, why this is a year-round strategy is because of its power of compounding. Most of you must have good amount of good amount of income that you receive from your salary in basically your savings account or your salary account. However, you always procrastinate of what and how to dispose that money apart from spending. So in that case, if as we continue with the example of PPF, in case you have this option of basically investing that amount in one lump sum, that is either in March or at any point of time. However, if you invest that in the month of March, or alternatively, if compared to that you invest in the month of April, you have this opportunity of generating interest from the April month onwards. On that amount, obviously, the interest will be calculated for the month of May, the principal and interest that you received in the month of April. So automatically, the power of compounding takes place. And until the month of March, you ensure you get a good amount of investment that is made in PPF on which interest is generated. So yeah, power of compounding is also one of the priorities that you can consider. Rather than procrastinating it, I would actually recommend that you basically consult a financial advisor and think which are the best possible options for you, so that you can take care of your taxes also, your savings also, and there is a power of compounding also in your income generation. Fourthly, with respect to MOM spread of tax liability, if you guys must have heard, many of you are paying interest at the time of filing your returns because advance taxes were not paid in time. So yes, government ensures that at the same time when you are earning the income, you're actually paying the taxes, and not only once your financial year ends and at the time of return filing. Hence they have come up with this concept of advance tax. So जैसे हमारे सब loans में installments होते हैं, वैसे government ने भी हमको installments दिए हैं, 4 installments to be more precise. जून 15 तक गवर्नमेंट बोलते हैं कि आप अपना 15% ऑफ जो भी इनकम है अपार्ट फ्रॉम सैलरी, क्योंकि उसके ऊपर टीडीएस डिडक्ट हो जाता है, तो उस इनकम के ऊपर आप अपना टैक्स भर ले. सितंबर 15 तक 45%, दिसंबर 15 तक 75% एंड मार्च 15 तक अपना 100% लायबिलिटी आपका भर के हो जाना चाहिए, so that you ensure that you're not paying any additional interest and you're actually spreading your tax liability and not facing a cash crunch in the month of filing your returns in the form of paying self-assessment tax. Accordingly, avoiding random investments also, since we are in the month of like January and February, जहाँ पे most of the times you will feel mutual fund distributors and insurance companies are advertising कि आपको अगर tax बचाना है, why don't you invest in this? Why don't you buy this particular product? But is that actually needed for you? That is something to be, checked and considered. So hence I would always say tax बचाने के लिए इन्वेस्टमेंट करना जरूरी नहीं है, और हर इन्वेस्टमेंट से टैक्स बचेगा ये जरूरी नहीं है. सो टू एंश्योर कि कौन सा इन्वेस्टमेंट आपको एक्चुअल में जरूरी है, जो आपका इन्वेस्टमेंट का पर्पस भी सॉल्व करे प्लस टैक्स सेविंग का भी पर्पस सॉल्व करे, दैट इज व्हाट समथिंग you can decide rather than making a hush-hush decision on. To give you an example, अगर जैसे हम हमारा पीपीएफ का ही एग्जाम्पल वापस से कंटिन्यू करते हैं, तो अगर हम पीपीएफ के बारे में सोचते हैं, या तो फिर समझो ईएलएस के बारे में या एनपीएस के बारे में सोचते हैं, बिकॉज दीज टू आर टैक्स सेविंग इंस्ट्रूमेंट्स. हमारे सेविंग अकाउंट्स में फंड्स है, बस वी आर नॉट टेकिंग दोज इनिशिएटिव्स to either buy ELSS or deposit in NPS. तो अगर हम सेविंग अकाउंट में ही जाते हैं, तो सेविंग अकाउंट गिव्स अस लाइक आई हैव टेकन अ हायर साइड ऑफ ROI, but normally 3.5% generally saving accounts returns देते हैं. Compared to that in ELSS and NPS also have taken on a lower side 9%, actually उससे ज्यादा ही होता है. Or ELSS, again, I have still taken that as at a lower side at 10%. तो अगर आप difference देखें, opportunity cost देखें, तो आप 6% closely or 5% in case of NPS, you are losing. And hence, अगर invest कर ही रहे हो, अगर करना ही है, tax बचाना ही है, तो why not? Why not think about it all throughout? Why not take actions throughout the year and not wait at the last moment? Wait for the last moment. So now, if going forward, since most of you are salaried individuals, how can you start with respect to your salary taxable income? So one of those parameters is salary restructuring. So salary mein restructuring mein, you will think, how can I restructure my salary and how it will help me save my tax and how to reduce my taxable income? It's very simple. If you ever go through your salary slips, you will find majorly 3 components in your salary. One would be basic, one would be HRA, and third would be special allowance or variable allowance, personal allowance. Terminologies depending upon different organization, but generally मोटा मोटी आपको ये 3 दिखेंगे. लेकिन अगर आप देखें इसको, तो ये सारी चीजें टैक्सेबल है अपार्ट फ्रॉम एचआरए का कुछ पोर्शन टैक्स फ्री हो जाता है, लेकिन अगर वेरिएबल अलाउंस है या स्पेशल अलाउंस है, ये सब कुछ इंक्लूडिंग योर बोनस, एवरीथिंग इज बेसिकली टैक्सेबल. तो हाउ डू यू इंश्योर कि इसमें हम टैक्स कम करें? It is very simple. Reach out to your HR, ask them कि जो special allowances है उसको categorize करो. For example, जैसे Pluxee है, Pluxee also helps you with like food allowances, one of meal allowances or food allowance, that is one. So आप अपने HR को बोल सकते हो कि उसको categorize करो कि food allowance दे दीजिए, uniform allowance, transport और conveyance allowance, books and periodicals allowance, प्रोफेशनल अपस्किलिंग के लिए प्रोफेशनल अलाउंस भी आप ले सकते हैं, LTA. सो दीज, अगर आप इसको खाली स्पेशल अलाउंस को कैटेगराइज कर लेते हो इनटू दीज आर द वंस व्हिच आई मेंशन. अगर आपको कार दी गई है अपने ऑफिस से, तो ड्राइवर अलाउंस, फ्यूल अलाउंस, अगर ये सब आपको मिल जाता है, तो इसके सामने एक्चुअल बिल्स जो आपने एक्चुअल स्पेंड किया है उस पर्टिकुलर अलाउंस के सामने, तो वो आपका taxability में कम हो जाता है वो amount, which actually will help you reduce your taxes by say 40,000-50,000 if I just give you a general estimate on the same. So I think सबसे पहले everybody should reach out to their HR and ensure that your salary is being restructured. After deciding that, if आपको ये सारे options मिल रहे हैं, सारे benefits मिल रहे हैं, क्योंकि ये सब generally old regime में ही मिलते हैं, new regime में इसके benefits नहीं है. So if you are getting that, it will help you select which regime is beneficial for you, old regime or new regime. Once that is also sorted, आपको पता चल जाएगा आपका tax saving कितना है, right? मतलब आपका कितना tax payable आ रहा है और आपका कितना taxes save हो रहा है. In case you want to still consider कि आपको और अपना tax liability कम करना है, then you can think of other exemptions and deductions, like in case of deductions, ATC and all of that. तो आपको पता चलेगा, अगर आपका मेडिकल इंश्योरेंस भी आपको लेना है, अगर आप ओल्ड रिजीम में जा रहे हो, तो यू विल बी एबल टू एंश्योर कि मैं वो चीजें पहले करूं जिसमें मेरा टैक्स सबसे पहले बचेगा. यू आर एनी विच वे इज गोइंग टू डू दैट with respect to your other investment options also, but I think first priority should be given to the tax saving expenditures. PF सबके accounts में से तो deduct होता ही है, so that is also a tax saving tool. Once all this is sorted, and when you finally arrive at the final tax payable on income other than salary, you will come to know आपको कितना advance tax pay करना है, which we discussed in the MOM spread of tax liability. तो अगर आपको advance tax pay करना है, to avoid interest, I think you should ensure that you pay your taxes on time. और ये सब हो जाएगा, उसके बाद जब आपको रिटर्न फाइलिंग करने की बारी आएगी, तब it would be really very smooth. You will not have any stress about it, and it can be managed very, very nicely. So I think this is the whole idea, how you should get it started and ensure your tax returns are filed on time, because most of you wait till the last 31st December, जब पेनल्टी के साथ अपना रिटर्न फाइल कर सकते हो, बिकॉज यू आर जस्ट इंश्योरिंग योर डॉक्यूमेंट्स आर इन प्लेस, योर टैक्स सेविंग proofs are not, you can't find them, and you want alternative ways to basically save your taxes, which is really late at that point of time. And hence, to save on your interest as well as your penalties, I would recommend कि आप अपने रिटर्न्स भी टाइम पे भरे, और इन सब पैरामीटर्स को अगर आप diligently follow करेंगे तो I think you would be sorted. A basic question, most of you must have gone through the Google form. I would still recommend, if nobody has, I mean, any of you, if who have missed to basically and have joined late, तो अगर आप अपना Google form एक बार fill कर लेंगे, तो you'll just get a knowledge check for yourself. And we can, after the seminar, discuss a little bit on that as well, if need be. So उसमें से एक question है with regards to exemptions and deductions. Exemptions क्या होते हैं और deductions क्या है? सबको लगता है ये एक ही है. नहीं, actually ये एक नहीं है, ये दो अलग अलग चीज है. Exemptions are those जहाँ पे wherein basically whatever income you earn, that is not taxed by the government, and hence it is called exempted from tax. However, when it comes to tax deductions, whatever income that you are earning, usme se wherein you have to make an investment, or you have to pay your premiums on term insurance or your health insurance. So that is basically a particular amount of your income that has been utilized to ensure the other the spendings, right? And hence it is deducted from your income. It is called as tax deductions. Basically, salaried individuals have this standard deductions, wherein in old regime it is 50,000, whereas in new regime it is 75,000, because there's this amendment that had come on 23rd of July 2024 with respect to the budget, where jahan pe government wants to incentivize people who want to opt for new regime. So hence the deduction has been increased. HRA basically has three parameters which help you analyze whether HRA में आपको benefit मिलेगा कि नहीं. So the rent HRA is basically only for those people, those who are staying in rented houses. First parameter of that is your actual HRA that is basically reflected in your salary slip. The second one is the rent paid minus 10% of your basic, and third is 40 or 50% of your basic salary. 40 or 50%, why? Because the people who are staying in 4 cities, that is Delhi, Mumbai, Calcutta, or Chennai, these four cities are eligible for 50% deductions, and for other cities it is 40%. So that's about the HRA. LTA, as we mentioned, in case you have that component as a salary component in the name of LTA, you can take this benefit twice in a block of 4 years. We are in the current block of 2022 to 2025. In that case, if you're traveling by basically train or by air, then you can take benefit with respect to the basic ones. That in case you're traveling by a flight, then economic class, by train, then sleeper class. You cannot, this benefit is not only restricted to your own self, but to your spouse, children, and parents as well. And it is for round trips, which you are actually incurring the expense for. However, this will not help you take benefits of food or hotel accommodation. It is only restricted to your travel aspect. Coming to another, conveyance allowance. As I mentioned, in case you are traveling for your office requirements, then this allowance is beneficial for you. For education allowance, in case you have 2 children, then your children's education allowance is a benefit that you can avail. That is 100 rupees per child per month. So maximum allowance that you can take for a financial year is 2,400. and as discussed also uniform allowance. So there are many other allowances as I discussed earlier, but we are just restricting ourselves to the important ones. Coming to deductions. Deductions, everybody is mostly aware about the ATC deductions, but I will still reiterate for you. ATC deductions includes PPF, NFC, LIC premiums, principal of home loans. In case you're a senior citizen, then you can ensure that any amount that you are depositing in senior citizen saving scheme, you can take benefit of that as well. In case you are having children and paying school fees, then you can take benefit in ATC as well. Generally in income tax, it is referred to as tuition fees, but it is actually not the tuition fees, but the school fees. Sukanya Samriddhi scheme also, if you're investing, you can take benefit here as well. So ATC has a limit of 1,50,000 rupees, including everything that we've mentioned. Apart, I'm most of the times it happens that ATC limit is, it has a very less amount wherein the actual expenses are really high. So yeah, we're expecting that the forthcoming budget on 1st Feb will have some relaxations in ATC. Coming to ATCCD 1B, it is more so with respect to your own contribution to the NPS, the National Pension Scheme. Your 50,000 is the limit wherein you can invest as an employee in your own NPS and get a tax benefit. ATC, AT, CCD 1B, these are the options. These are the basically deductions, if I say so, which are available only in the old regime and not in the new regime. Coming to ATCCD 2, wherein an employer can contribute to your NPS. In old regime, it is 10%. In new regime, it is 14%. So this is something either you have opted for old regime or new regime, you can avail the benefits of the same. For example, if you don't have NPS in your salary portion, wherein most times it happens that employers do not contribute to the NPS, I think I would strongly recommend that because it will help you in your retirement planning. So that is something I actually strongly recommend, which basically has a good ROI as well. In case of Section 80D, here I think I can broadly classify this into 3 parameters. In case the person taking benefit is not a senior citizen and the parents are also not senior citizens, then they have this benefit of 25,000 for the person who is claiming the benefit, for the spouse and the children. And in addition to that, for the parents, another 25,000. For in the other option, the other probability could be either the person taking benefit is not a senior citizen, but the parents are senior citizens. So in that case, 25,000 for self, family, and children, and that for parents, it would be 50,000 rupees. And third, I don't think so most of you are in that category, because in that case, it would be you are also a senior citizen and the parents are also senior citizens. So ATD, those may 50,000. 50,000 would be the maximum amount that you can take benefit of. That comes to 1 lakh actually. So yeah. ATE is like anybody who is basically planning for higher education and is considering taking a loan for the same, can opt for ATE. The interest portion is eligible for the benefit and not the principal and interest portion also. I think it's too much of information. I hope everybody is getting that. In case you are not, I would love to know if you have any queries or if there is any understanding issue, or if I need to increase or decrease the pace of it. You can please write that in the comment section. Okay, so yeah, ATU, this is basically a deduction that is available to people who are specially abled. 75,000 is generally the limit, considering on the severity of the disability. the most awaited thing, I think, was what is the difference between the old and the new regime, and when should you opt for the old and new regime? So there's a myth wherein most of the times people think that new tax regime is beneficial always as compared to the old ones. However, there is no clear-cut distinguish wherein you can define which regime will be beneficial and which will not be. But to generalize and considering the experience that we come from, just excuse me, guys. So this was one of the questions that was there in the Google Forms as well. And wherein most of the times we feel new tax regime is always beneficial, and it's not that the case. Old tax regime could also be beneficial, where generally when it is beneficial. So if you have HRA, if you're staying in a rented property and claiming HRA benefits, if you have home loans, then I think these are the two parameters where in most cases will have old tax regime as beneficial regime and not the new one. However, there could be a possibility that new tax regime is also beneficial if you are considering the percentage of your basic salary as well. Hence, I would recommend that just considering what are the myths that are, considered, that could not be a decision making factor, and old regime and new regime should be considered according to your own specific needs and your investments. The tax slabs for income tax old regime and new regime are, we'll go with the new regime first. It is 0 to 3 lakh, no tax. 3 lakh to 7 lakh is 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, it is 15%. 12 lakh to 15 lakh, it is 20%. 15 lakhs and above, it is 30%. And in case of old regime, 0 to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, it is 20%. And about 10 lakhs, it is 30%. So most of you think, why this there is no parity between new regime and old regime slab rates? So the purpose of having two regime is because government wants to incentivize people for opting new regimes. It is giving you a higher slab rate, but there are the major difference. Why so? Because there is benefit of exemptions and deductions in old regime, which is not the case in new tax regime. The only benefit that you can take in new regime is of employer contribution. You cannot take the benefit of your own contribution as well in new regime. So I strongly recommend, if you do not have NPS, your employer's contribution in your salary, in your CTC, you can reach out to your HR and ask them. Maximum 14% is what you can take, and you are sorted for with respect to new regime. With coming to wherein you can, what are the other ways apart from salary that you can take benefit of, right? So most of actually Indians have this way, this goal with respect to buying a home in India, right? It is more so of an emotional decision than a financial decision, but that is also something I would recommend कि उसमें भी आपको tax benefit हो सकता है. So how can you take up tax benefit in these cases wherein you're actually planning to buy a house, in case you already have one and you want to sell and buy another one, or else you actually want to buy another house property, a residential house property. So I will classify that into three sections. Firstly, wherein you already have one and you want to sell and buy another one. So that is taken care by section 54, wherein whatever the profits that you earn with respect to the property that you sell, you can invest that profits into the new new residential property, and then you can save on your long-term capital gains tax. If you do not take this benefit, then the long-term capital gain would be close to 12.5% if you take if you do not take indexation benefit, and in case you take the indexation benefit, it would be 20%. So why pay for 12.5% and 20% of taxation if you have this option of saving tax? Then coming to section 54 EC, this is a section wherein you already own a house property, but you're not willing to buy one, and you are not even willing to pay taxes. Then government has actually notified 4 bonds, that is rural electricity bond, National Highways Authorities bond, Power Finance bond, Railways bond. So these are 4 bonds wherein you can invest. The lock-in is of 5 years. The rate of return is a little lesser than the market rate, but you will still not have to pay tax on that. So it was still a good option wherein you can save a good amount of your taxes by just investing in those bonds. The third one is section 54F. These is generally for the people who are saving to actually buy a house, in be it in equity stocks or in equity oriented mutual funds. So if it is for them, you can actually redeem your mutual funds and buy a property and not pay tax by actually utilizing section 54F. So in this case, government says if you want to invest in section 54F, not only profits as in the case of section 54 and section 54 EC, but the whole entire sales proceeds needs to be invested in the new property so that you can take the fullest benefit of your capital gains taxes. Government says that they consider the practical aspects of it also, and hence they have given you an option of capital gains account scheme. This scheme is basically for those people who intend to buy a property but are not sure, and or maybe are looking for one but are not able to get one. So government says, okay, I'll give you 2 years time if you want to purchase from the date of selling the existing property. You can have 2 years. For 2 years, invest in the capital gains account scheme, and then once you are finalizing your property which you need to buy, you can actually withdraw the amounts from the capital gains account scheme and pay the down payments of the property. However, in case you want to construct the property, then you have 3 years time. So yes, that is a case wherein government says don't pay taxes in the month or in the year wherein you actually have sold the property, but utilize capital gains account scheme. So these are the benefits there which are only available for the people who are considering long term as their vision of, because 3 years is the lock-in period in case of all the sections, section 54, 54 EC or 54F. And if you are considering that you'll just buy a property for the sake of saving tax, government says no. If you sell so within 3 years, then you will be liable to pay the capital gains which was supposed to be paid in the year when you actually sold that particular property, and you will have to pay tax with interest in the year when you sell the new property. Taking advantage of tax deferred retirement plans, that is also one option. As I mentioned, NPS could be one of the ways wherein you can ensure your retirement plans are taken care of by ensuring when at the time of earning, which is your salary earning period, you start depositing in there, and you can take the benefits. Last but not the least, tax harvesting. I think that was also one of the questions that was there in the Google form. So tax harvesting comes to, we'll come to that. I will categorize that again into 2 parts. One, first thing, I would say it is not always possible that your portfolio will only show positive or profits, right? There could be chances that you have some scripts or some mutual funds which are showing losses. So you can actually, to book those losses, you can sell them right away, buy maybe after a week or so, because there will not be a major change in the prices, and losses which you book right now can be ensured that in future for the next 8 assessment years, you can, wherein you earn the profits, you can set off those losses and also reduce the liability, tax liability in the forthcoming years. The other aspect is, in case you are actually have sold some stocks or mutual funds and have generated profit, you can sell the loss making ones also. Ensure your profit is reduced because loss is set off against those profits, and accordingly you can still reduce your tax. Because in long term capital gain there is 1.25 lakhs of limit wherein no taxes are actually required to be paid in the capital gains section. So now that you've basically understood a lot of tax provisions, I would recommend everybody, why not you reassess yourself and fill up the Google form again and check whether there is any increase in your knowledge or whether I could actually add any value in terms of tax. So I would actually want to ask anybody if they have any questions for me. You can go. I will take 2 minutes, and I think if you want, you can go through the Google form, and we'll wait for you to answer that again, and then I can take the questions. So I think we can again start with the question and answers. So the questions that have come up are, can you please tell once again about HRA? Okay, so HRA is basically, if you see, so you have three conditions that you need to fulfill, and lowest of all three, the amount that you derive will be eligible for tax exemption. The first condition is the actual HRA received, which is there in your salary slip. That can be one of the parameters. The second parameter is basically in which city you are staying. So if you're staying in as the 4 metro cities that I have been defined as per the Income Tax Act, be it Mumbai, Delhi, Calcutta, or Chennai. If you're staying in these 4 cities, you're eligible for 50% of your HRA, 50% of your basic as HRA. In case of other cities, apart from all these 4 cities, only 40% will be eligible. Third parameter is whatever rent you are actually paying, you have to take that as an annual amount and then deduct 10% of your basic from that rent amount, and you'll derive at one particular figure. Now you have to calculate, since you have all the calculations of the 3 parameters, check which is the lowest of them. That is the amount that will be exempt from tax. So that is about the HRA. We have one question with respect to NPS. In which regime, what is the benefit that we take? Okay, so in this question, I would like to reiterate, there are 2 types of NPS. One is employee contribution and other is the employer contribution. Now I'll talk about the old regime benefits. In case of old regime, your own contribution up to 50,000 is actually tax. You can take tax benefit on the same. It's a tax deduction. In case of employer contribution, 10% of your basic salary can be taken for tax benefits. So this comes for old regime. Now coming to new regime, 14% of your employer contribution only can be considered as your tax benefit option. There is no benefit even in case of your own contribution. Only employer's contribution is eligible in case of new regime. Another question that we have is with respect to home loan. Just a sec. Why home loans is beneficial in saving taxes. Here also I would like to categorize it in case of self-occupied property and in case of rented property. In case of self-occupied property, the maximum benefit, how it helps is in terms of interest. Any interest portion that you pay in your EMI, that can be considered for adjusting against the other incomes that you have. So maximum 2 lakhs in a year loss can be booked in house property for self-occupied purposes. In case of rent, we have this option wherein after deducting your municipal taxes and other 30% standard deduction from the rent income, the balance amount can be still be furthered set off against the interest payment on the EMIs that you're paying for that particular house. And that also up till 2 lakhs, you can take the benefit. However, in addition, assuming you have 5 lakh of interest and assuming you have after your standard deductions and municipal taxes, you have an earning of say 5 lakh, 3 lakh. So 3 lakh minus 5 lakh is exactly 2 lakhs. So the loss of 2 lakhs can be taken care of. However, if you had your interest of say 7 lakh rupees, then 2 lakhs additional, which you could not utilize in that particular year, could be taken care in the next financial year and you could carry forward the same. Hence, home loans are beneficial for saving taxes. But it is not necessary that you take a home loan because there is an interest component also attached. So if it is necessarily required for you to do so, only then I recommend that you should take a home loan, but do not take a home loan for tax purpose only. I think we'll take a last question. Is employees' contribution to NPS part of 1.5 lakh limit in ATC or it is exempted separately? So employer contribution to NPS is not a part of 1.5 lakh and it should not be categorized in ATC. It is there is another section called ATCCD bracket 2, wherein there is no limit with respect to your employer contribution. The only limit is 14% of your basic salary. There is no cap as such. I think we are, most of the questions are.
Niyati,
Yeah.
in the chat section, if you see the chat section, I have also listed few more questions. You can take that up.
Yeah, sure. So we have one question wherein is this section 54 EC investing in bonds other than 1.5 lakh of ATC and can we get benefit from it? We don't own a property. So no, 54 EC is only for the people who actually own the property and there is no link between section 54 EC and ATC. These two provisions are separate and 54 EC is only for the people who own a property. Second, we have, can we claim LTA twice in a year or just one? So LTA is basically, you can take that in twice in a block of 4 years. So in case you're having 2 domestic trips, but you have not exhausted the limit as the allowance that is being reflecting in your salary slip, you can take it twice. You just need to ensure the documents for all the spending that you have done are submitted to your employer, and that is the only thing that you need to do. So you can basically, but out of four return filing that you do, only 2 times you'll be able to take the benefit of LTA. Another question we have, can we purchase property from HUF account? Yes, if HUF has the funds in its bank account, you can definitely take or buy a property in the name of HUF. We have another question. can we claim parents' medical expenses, that is doctor consultancy and medical costs? So in ATD, I would recommend firstly, I would recommend them to have an insurance if that's possible. If not, you can still claim. You just need to ensure that you have your medical expenses in place, and it should not be paid in cash. And these documents are to be submitted to your employer so that your Form 16 reflects those benefits and your TDS is reduced accordingly. In addition to that, 5,000 is the amount. If your 50,000 or 25,000 limit is not exhausted, then 5,000 is preventive health checkup cost. That also you can take benefit under Section 80D. We have another question. Can we please talk about Section 1010D on how can an employee get benefit? It is with respect to LIC maturity. So there is no direct link between an employee benefit as such. In case you have an LIC which is maturing and you have received the proceeds from the LIC, then you can take a benefit on the same over here. We have another question. What is the taxation on fixed interest income which we receive half yearly or yearly after buying individual corporate bonds offered by Adani, Reliance, Muthoot Capital Service, etc.? Is the maturity redemption of our principal invested, say 2 lakhs, also taxed? So no, these are not taxed. Interest is taxed actually, but not the maturity and redemption of your principal. Another question we have is, what is the strategy I should use to donate amount in a HUF so that it becomes income of HUF and it gets deducted from my income so that I can get deduction in my income when I donate to HUF? Any other strategy can you please recommend using which I can get tax savings using HUF? So firstly, you cannot donate to HUF. You need to build a corpus for HUF. Karta or any co-partners cannot contribute to HUF. Otherwise, the income which is generated in HUF would be clubbed with that of that individual who had actually contributed to the HUF. So I would recommend you do not do so. There are inheritance could be one of the ways wherein you can ensure you have corpus for HUF, and accordingly rental income could be generated, which will help you save tax. We have another question. I am taking Sukanya Samriddhi Yojana, paying 1,50,000 per year, but I am paying the amount at the end of the financial year. Is it okay? Yes, that is okay. That is not a problem. We have another question. How many years we need to invest, and if you are in new tax regime? While filing, can we select old regime and get exemption for NPS? So in case of NPS, till 60 years, you have to, you can actually invest. In case you are in new tax regime, as I discussed earlier, employer contribution will be the amount that will be invested. However, in case of old regime, if you're opting, your employee contribution as well as the employer contribution can also be taken, and tax could be saved on the same. We have another question. Exhausted ATC has only have 1,50,000 limit. What other options are there we have? I'm sorry, this is an incomplete question and I will not be able to answer this. I think we have taken a lot of questions. We have Preeti with me, and I think she will actually give you a rough idea how to take things forward. And I think that's about it.
Okay, so I just want to say quickly that thank you everyone for joining this session. And yes, I would thank Niyati for taking it, and over to you, Steffi.
Thanks, Preeti. Thanks, Niyati. It was really, really insightful. Thank you, everyone. Meet you for the next webinar, probably next month. Thank you so much for joining with us today.
Thank you, everyone. It was an amazing audience. I hope the questions were answered, and I'm sorry if I couldn't answer most of the questions. I tried to, but yeah. it was not possible for me to do so. So thank you so much. Bye bye.